Hey finance fam, welcome back to my channel. In today's video, I'm going to uncover 4 little known facts about your high yield savings account. If you don't have a high yield savings account or you don't know what a high yield savings account is, it's essentially a savings account that allows you to get paid a lot more interest on your money than a traditional savings account from a traditional bank. These savings accounts typically are going to pay a lot more interest. So it's very important to have one of these accounts. Plus, you need somewhere to put your funds where it's still working for you, even if you're not going to be investing the money. And usually you keep a emergency fund in a high yield savings account. So yeah, you may not need the money, but you still want it working hard for you. And that's why an online high yield savings account is so important to have. But there are traps and things that people don't even know are a thing. So let's dive in. The first little known fact about a high yield savings account is that the interest that kicks off from these accounts that you get paid every single month, that interest is taxable. I'm sorry to burst your bubble, but yes, Uncle Sam wants his portion of your high yield savings account interest. A lot of people don't realize this, and they essentially end up in some trouble when they end up having to pay taxes later and pay penalties and interest on the interest. So basically, some examples of taxable interest, this is straight from the IRS website: interest on bank accounts, money market accounts, certificates of deposits, also known as CDs, corporate bonds, and deposit insurance dividends. So essentially, you need to realize that that money that you're getting paid from your high yield savings account needs to be paid taxes on. So they're going to issue you what's called a 1099 at the end of the year. And that 1099 will essentially tell you how much interest you've been paid from your high yield savings account. And you take that, and that's what you use to do your taxes and get those taxes paid on it. So don't let that deter you, of course. The good news is that your money is still working for you and earning you something. The bad news is, yes, a portion of that is going to have to go to Uncle Sam. The second little known fact, or shall I say strategy, about a high yield savings account is that you might actually be better off putting some of your money into something called a certificate of deposit, or a CD, instead of using the high yield savings account. Let me explain. This really pertains to 2023, where interest rates have actually increased very, very quickly. So this is a chart of the effective federal funds rate, which essentially dictates what interest rates we pay on things like mortgages, car loans, personal loans, credit cards, whatever. So basically, the Federal Reserve is responsible for setting this interest rate, and it has increased at a very, very fast pace. You can see that we went from 0% interest rates all the way up to over 5% in a very short period of time, considering traditional monetary policy. So this has been quite an extreme move that has led to strategies that we can use in 2023 that we haven't really been able to use before. So before, the idea was put all your money in a high yield savings account. CDs or certificates of deposits don't really do much for you. Well, now we're seeing an interesting dynamic in the interest rate market to where CDs are actually paying a pretty good interest rate right now. You can lock in a pretty good percentage and get almost a whole percent more on a CD than you would in a high yield savings account. And you might be thinking, well, 1% doesn't seem like that big of a deal. It's not that much. But most people, if they have a lot of money in their account, that 1% can be a nice chunk of change. And then you have to envision that compounding over time. So every percent helps. So let me kind of explain my thought process here. A high yield savings account at Barclays, for example, is paying 4%. So 4% is a really exceptional interest rate considering the past decade. We haven't seen interest rates like these in a very, very long time on high yield savings accounts. So this is fantastic. And this is a great thing to do, a great place to put your money. But if you look at CDs, you can actually get almost a full percentage point more, so 90 basis points more at 4.9% by utilizing a 12-month CD. So who would want to actually do this is the question. Using a CD for some of your cash is not going to be a good strategy for A lot of people. But for those of you who have very cushioned savings accounts, like me, for example, I am a business owner. I know a lot of business owners that have a lot of money in their online high yield savings accounts because it's a risk thing, right? And it makes them feel more comfortable. It makes me feel more comfortable to have not just 6 months of living expenses, but years of living expenses. That's how I roll. That's how a lot of other people roll too. So there's money in my high yield savings account that I know I am not going to touch for a long time because I'm that cushioned. And so the what I could do is, or what anybody could do, is they could take a portion of their savings that they know it's extra because it's making them feel more comfortable with their financial situation. They know they're probably not going to use it in the next 12 months. Take that money and instead of keeping it in an online high yield savings account, get that extra almost 1% and put it in a CD for 12 months. Now, there are downsides to this. That money's locked up. You don't want to go touching that money. If you're going to commit to a CD, you have to realize that whatever maturity that you choose, whether it's 1 year, 2 year, 3 year, 5 years, whatever it is, that money needs to be locked up for that period of time. But right now, what I find interesting in 2023 specifically is that you are getting paid an extra almost percentage, depending on what bank you're using, to utilize a CD for 12 months for part of that money. So, you have to know your financial situation for this strategy. You have to know that you can commit to that time frame. You can commit to the 12 months that you're going to have to keep that money locked up. If not, you're going to pay penalties, and that sucks. That might defeat the whole purpose. So just know that that's what you're going to need to do. But for a lot of people that have very cushioned savings accounts for multiple reasons or hold a lot of cash for multiple reasons, this is a strategy that you may want to think about doing now. This is not going to last forever. This situation, this interest rate environment is not going to last forever. So it's nice that we at least have this to strategize right now. The third thing that is kind of not very well known about an online high yield savings account is there can be tricks. So some of the banks can end up putting in tricky language to make you think that they're going to pay you a big percentage on all of your money, when the fact of the matter is they're not. They may have a limit where they only pay you a high percentage up to the first $5,000, or they may have a limit where $5,000 or more is what gets the larger percentage. So you really have to be careful which bank you're going to, especially the smaller banks, because they may have some tricky language and you may not end up getting the interest that you expected. Here's an example. So this is CIT Bank, and this is one of the best examples that I found pretty quickly when I started doing this research. So you'll see that it says the Platinum Savings, which is basically an online high yield savings account, is paying 4.85%, which sounds fantastic, right? But then you catch something like this on balances of $5,000 or more. So if you read this, thank goodness they made this very clear so that it can perk your ears for you to do a little bit more digging. But you'll see here in the fine print that it says a 0.25 APY on balances of 1 cent to $5,000 or $4,999.99, and then 4.85% on balances of 5,000 or more. So basically the first $5,000 of your money is only going to get paid 0.25% versus 4.85%. So it would be very, very easy for somebody to not catch that, and they think that they're going to get paid a lot of interest. But in that example, if you have an account with $5,000 or under, you're only going to get 0.25%, which is pitiful compared to what you can get at other online high yield savings account companies, because they'll pay you basically that 4% right now on all of your money, including the first 5,000. The fourth little known fact about your high yield savings account is that you actually may not be able to withdraw as much as you'd like. You don't want to be pulling from often, but some people, they may be, and they may not realize that there could be fees imposed upon them depending on their bank. So this is VO Bank, and VO Bank's high yield savings account. In the fine print, you'll see a fee will be charged for exceeding 6 withdrawal transactions per monthly statement cycle. So just something to be aware of. This may not be an issue for a lot of people, but if you are one of those people that plans to go in and out of this account a lot within a given month, just be aware of your bank rules and make sure that you're not getting charged a bunch of fees. So what are some of the best online high yield savings accounts? There's Barclays, there's Ally, there's Synchrony, there's Marcus by Goldman Sachs, and plenty others. All right, finance fam, if you found this video helpful, please smash the like button, subscribe to my channel, tell your friends. I help you manage your money better, make more money, all the things. I'll see you next time.